Snipers, you have to see what's happening to the Bitcoin price this Tuesday as we are testing the most important support level at 41,950. So I had to get this video out to you guys. We are coming towards this 100-day moving average at 41,000 US dollars, but the DXY has yet to see a break above 93.62, and that's going to be the area that if we break above this resistance, we could potentially be seeing a major move to the downside. But since we've yet to get to this resistance, are we just going to be seeing Bitcoin flirt with this $41,950 level and then see some upside? Or are we going to be seeing the sell pressure come in and the volume take us down towards this $34,788 level to retest a previous resistance as a support? If you guys remember, we came down from the $64,000 level. We formed this flag in the $30,000 range, and this has been a resistance level. We broke above it. We got to 54,000, but now we are testing an extremely important support at 41,950, and that door opens with volume on a 4-hour candle close fully below 41,950. In my opinion, that's going to be a major concern. We're going to watch the DXY and also cover some of the other revolving parts of the cryptocurrency market to give you guys a 4-dimensional analysis as we always do. But first, I want to talk about what's happening here exactly with Bitcoin at 41,950 so far. If we were to go into the hourly chart, we have yet to really see strong volume come in. We are still seeing light volume, and realize this: until we start to see volume, the path of least resistance is always going to be sideways to a little bit higher. And so the fact that we're at 41,950 right now is certainly a concern that shows some weakness. It shows that it's a level that the bears are continually coming down to test, and we've already seen the range below 41,950 down to 40,000 cleared. And of course, that tells me that if we start to see volume, we're going to slice right through below 40,000 since we've already cleared order books here. And in my opinion, we really want to start monitoring the extremely small time frames at 41,950 because at any point in time, volume can come in to the downside. So far, we have yet to really see that sell side pressure. So I'm not necessarily fully concerned right now, but remember yesterday I said that we're not necessarily fully bearish or bullish right now. We are neutral bearish. And the reason it's neutral bearish is because we are seeing a lot more sell volume than buy volume. Notice on this 3-hour chart, all of these large spikes of sell pressure, these are institutional sell volume bars. And we've yet to see institutional buy volume in these lower ranges, telling me that there is another destination in mind. And so I think that it's extremely important right now to watch what happens here at 41,950. If we want to assume any upside for Bitcoin at this point, we have to get above the weekly open at 43,100 US dollars. And that is giving Bitcoin some grace because initially it was 44,800. And then, of course, 47,000, that's the major level, the monthly open that we really want to get to above. We want to assume some more medium-term targets to the upside. But just for the short term, we want to get above 43,100 if we want to assume any further strength between the range of 41,950 and 44,800. But the one thing that matters about the current price action is the fact that the door has now opened back up to 38,000. So the range that we're playing in is not 44,800 to 41,950 anymore. With this daily candle already breaching 41,950, the range is 44,800 to 38,000. So that's what I'm monitoring for Bitcoin. And for those that have been tuned into the Cypress channel, you know that we've had an altcoin prediction over the last 3 months that Bitcoin dominance is in early stages of a reversal. And that's why Bitcoin has yet to form any new highs. It formed a lower high. It allowed Ethereum to also form a lower high, but since we did not break new highs, one of my friends told me this yesterday. He's like, if a market's not going up, it's like a business. If the business is not growing, it's coming down. There's no middle ground. If it's not going up, it's going down, right? And so since we've yet to see new highs break for Ethereum and Bitcoin, and of course, we can talk about a ton of other altcoins, they're smaller market caps. Those don't really matter as much in the macro when it comes to the overall market. The fact that we've yet to form new highs tells us that the bear market has been progressing since the start of May when we topped out at 64,000. And since then, we've yet to form new highs. And now that we're seeing the first downside move for Bitcoin after forming its lower high, we've said that this move right here could potentially be the move that bleeds altcoins out back into Bitcoin. And that's exactly what we're seeing here with Ethereum down over 1%, with Bitcoin only down about 0.5% right now. You can notice here the Ethereum to Bitcoin chart, the leading indicator for all altcoins, seeing new lows almost on a daily basis now, and we're struggling to get above the weekly open at 71,000 Satoshis. If we come to 65,000 Satoshis, this is going to be a huge breaking point for altcoins. I think that is going to be the catalyst that will trigger the altcoins moving into Bitcoin, increasing Bitcoin dominance. And all of this is coming in line with the thesis. When we look at the altcoins outside of Ethereum and Bitcoin, notice how we also failed to form new highs, and now we're seeing some sideways price action. It looks like we have a lower high here as well, and we're sitting at this weekly open, not necessarily seeing strength. And remember yesterday I told you about the total cryptocurrency market cap chart. The weekly open stayed at 2.125 trillion, telling me that there's no new money coming to this market. It's just money moving around between different coins. And that also validates the thesis that if we're not seeing new highs right now, if we're not going up, then the only other direction we could be going in is down for the short term and medium term. And so at this point, with the total cryptocurrency market cap heading towards 1.78 trillion, if this level breaks to 1.13 trillion, this move right here in the total cryptocurrency market cap chart percentage-wise is about a 35% move, in my opinion, is going to be altcoins bleeding out into Bitcoin, Bitcoin seeing the least amount of downside out of every other altcoin. And that is exactly what happened in 2017 and 18. And so that wouldn't be a surprise. And so what we're really going to be monitoring now as well is Bitcoin dominance failing to form new lows since May, telling me that we're in the early signs of reversal. We're expecting this double bottom. So far, it looks like we have the double bottom here. And remember, all it took for the DXY is to double bottom, and then it got above its 20-week moving average. And now it's stayed above its 20-week moving average after the double bottom. Bitcoin has yet to see itself get above the 20-week moving average when it comes to dominance, but we've already seen the market structure of a double bottom, and we know DXY and the Bitcoin dominance is extremely correlated. Is it time for Bitcoin dominance to get above that 45% level, meaning that we're seeing a reversal in altcoin season for the short term, and we're going to see money moving back into Bitcoin? If that's the case, we get above 45% dominance. My target is going to be this 200-week moving average at 57% dominance, where we know Bitcoin loves to hang out, and it pretty much is in its most balanced form when it's at the 200-week moving average. This is homeostasis for Bitcoin dominance, in my opinion. And so that wouldn't be a surprise. And the DXY, once again, as I mentioned earlier, because we've yet to break above 93.82, this could just be another push up to see sideways price action. But if we break above 93.82, that's where I'd be very concerned for not just the cryptocurrency market, but also traditional markets. And we're already seeing the early signs of this with the S&P 500. Notice here on the daily chart, we're back below the 50-day moving average. This is a big deal. The S&P 500 is extremely correlated to Bitcoin. We saw that in March 2020. And notice here how every time we came to the 100-day moving average and got back above the 50-day, we slowly crept, further up incrementally, and we rescued ourselves. And every single time that happened, it worked. This is the first time we tested the 100-day moving average this year. And so far, right now, we are rejecting this 50-day moving average. That's a huge puzzle piece because we get back below 43.35 for the E-mini futures contract for the S&P 500. That could be a massive bearish scenario for not just the S&P 500, but also the cryptocurrency market. We really need to monitor this right now. And other than that, gold, US oil, other commodities, not necessarily doing much, not much to look at there. International markets also kind of stale. The real priority right now is to watch the DXY and the S&P 500. And to wrap up, Bitcoin at this point, 41,950. It's a critical level. 4-hour candle fully below 41,950 is the confirmation that we're going to potentially see 34,788 before any sort of volume. But remember, if we come down to 34,708, the likelihood that the institutions are going to buy that dip is high because they don't want to just crash price down on themselves. And once we get there, that could be a good place to maybe put in some long positions when it comes to day trading. When it comes to spot positions, it could also be a good place to dollar cost average. But just because we get to 34,788 and we bounce back up to, let's say, the monthly open at 47,000 doesn't mean we're not going to see any further lows towards maybe December or January of 2022, because guess what? We get to this monthly open at 47,000 and we reject. There's a potential we come back down towards this level of support that dates back to March 2020. It's a macro support level. And in my opinion, this is an area of interest for institutions to enter positions. It's where they probably want to accumulate. And so I wouldn't be surprised that in the more medium term, they want to drive price down to this macro support level around that $26,000 level. So that's more in the long term. My head is a dangerous place to be, and I've been watching these charts for over a decade now, being in this market. And so I'm not just going to, go into a crazy downside scenario, but what I am saying is 41,950 showing weakness is a very, very bearish sign for Bitcoin in the short term. In the medium term, I expect 34,788 to at least find some sort of buy volume and some institutional buy pressure here. And really the confirmation of a short-term bottom at this point is going to be watching the 6-hour chart, which is an institutional time frame, and for us to see some buy volume that equates to the amount of volume that dropped us 19% from 54,000. We have yet to see any sort of volume equate to that magnitude. And until we can see a buy volume bar that equates to this, I don't know if I could say that there's any short-term bottom in sight right now. So we're not being bearish. We're being the umpire, as we always are here on the Snipers channel, giving you a balanced perspective on the market, intraday and medium term, and then macro. We piece it all together, and then we correlate it with other markets to give you the 4-dimensional analysis. And I hope you enjoyed today's analysis, guys. Thank you all for tuning into the Snipers channel today. I am in Dubai. If you're here in Dubai, hit me up on Instagram. Until next time, that's it for today. Snipers out.